Hello and welcome to this PLSA webinar on how to deliver transformative change to your administration service. I'm Daniel Taylor, Client Director at Trafalgar House, and I advise trustees and pension managers on the best way to achieve improvements in their administration service.
And I'm Gillian Hickey. I'm the Implementation Project Manager at Trafalgar House. I oversee the transition of all new clients to Trafalgar House, and it's my job to make sure that the transition goes through with an uninterrupted delivery of service to members and that it's a worry-free process for the trustee and the employer.
In this webinar, we're going to be looking at some of the approaches that can be adopted to improve administration standards, and we'll be sharing with you the methodology we use at Trafalgar House to deliver service enhancements. Specifically, we'll be looking at how long-term transformative change can start to be delivered through an administration transition. And then we'll look at the initiatives that need to be worked on in a post-live environment to continue to help achieve continuous improvement. The pensions administration market continues to struggle with issues of consistency and poor quality. The Pensions Ombudsman reports that there still maintains a persistent rise in member complaints, with many of the complaint categories being linked to the standard of administration. At Trafalgar House, we've seen a significant rise in the number of trustees approaching us asking for help to improve their member service, quoting issues of frequent errors and rising backlogs. When all else fails, the only solution for many schemes is to change providers. However, many trustees and members can quickly become disappointed that the transformative change they were expecting to see didn't materialise. Recent reports of schemes transferring to a new administrator with the operational benefits they were promised simply not materialising highlight this problem. Changing administrator is not always the golden bullet, and whilst the transition process can be used as a foundation for positive change, it may not remedy the causes to long-standing operational issues. When we look to deliver service improvements, we at Trafalgar House break this process down into three distinct phases. The first is the transition phase. Now, this is concerned with managing transition risks, especially in the context of what developments may or may not be available immediately at the go-live transition point. The second is what we call standard transformation, with the focus of this phase being on the assessment of scheme-specific needs and the extent to which new operational environment will meet them. And lastly, the phase we call Customised transformation. Now, Customised transformation looks at scheme-specific technical projects, such as data cleansing or more longer-term strategic goals. We're going to look at each one of these stages in more detail, starting with the transition phase.
There can be some elements of transformation delivered naturally through the transition of administration services from one provider to another. For example, through high levels of automation, which bring down the waiting time for your members. And these would, of course, be some of the key factors in your decision to move provider. That is, you expect an improved service delivery to your members from day one. However, because the outcomes of the transition are not completely within the new provider's control, the key focus of this phase is the management of risk. As the project manager, my job is most heavily focused on managing the risks associated with the transition. In the very worst case, you could end up with late payment of the pensioner payroll, or in a situation where the new provider is unable to process member requests within reasonable or statutory timescales, or incur hold-ups that delay the transfer of administration services and result in additional fees or penalties to the scheme. So your project manager will be proactively assessing, monitoring and managing those risks and bringing them to the attention of the project steering committee for agreement on actions. What that means is that if the project is laden with risks, you may need to be willing to compromise on the functionality delivered at the launch of the new service. Simply put, if the project team has been putting in extra work to get on top of risks, there may be a loss of time in delivery of core functionality, such as calculation programming. And in conjunction with the project manager, you'll need to make decisions on those areas of trade-off. But it's not all doom and gloom. That's just me being a project manager. I said at the beginning that the transition is a process, and it is. And that's where that benefits you, the trustee, in providing a level of due diligence on the administration of the scheme. In fact, recently, the Chair of Trustees for one of our recent new business wins said that he had learned a lot about the scheme through the transition project. And that is true. Pensions legislation, regulation and administration best practices are continually changing, so that moving to a new administration services provider will highlight if the scheme has fallen behind in any of those areas. So these are the due diligence checks that I would expect to see performed through any transition project. Documentation. The new administrator will compile the full set of documentation governing the scheme and that's required for regulatory reporting and compliance. Also, Calculations. The new administrator will compare actual past cases against the trust deed and rules, covering member events such as leaving service, retirement, transfer, death, but also scheme events such as pension increases and benefit statements. Data. The new administrator will look at the quality of data held on member records by applying various tests, such as the common and conditional tests set out in the pension regulator's guidance on good record keeping. I would also expect checks to be carried out on the completeness and accuracy of the data needed to support automated calculation programming. And finally, to check on the completeness and accuracy of any scheme-specific data required for the particular nuances of the scheme. Finally, accounts. The new administrator will be keen to get through the first set of accounts smoothly and on time. To achieve this, a key part of the transition project will be transferring the previous and current year's accounting records, but also performing checks to make sure that everything reconciles. You don't want to get to the accounting year end, which could be some months later, only to find that you can't balance the books. So as a minimum, I would expect to see a reconciliation against the bank account at transfer, a membership reconciliation, and additionally, a problem area that we often see is unreconciled annuity income or DC unit holdings. So I would expect those to be checked as part of the transition process where applicable. The transition is a complicated project that is surrounded by risks, but by taking the scheme through that process, you will naturally address issues that might have been hindering the previous provider's ability to deliver a reliable service to your members, or to support the trustee's strategic objectives through timely and accurately delivered projects. And that brings me to my next point. The objective is not the transition alone. There is little point going through the effort of a transition if, once completed, the promised transformation does not materialise. What are the trustee and employer's longer-term objectives? Is it lower running costs? Enhanced service offering to members through a member website launch? Is it liability reduction exercises such as pension increase exchanges or enhanced transfer values? Or is the scheme on a course of de-risking? By sharing your longer-term aims with your new provider, an element of readiness can be included in the transition project. For example, I already mentioned that the transition project will provide validation of the data. So talk to your new provider about customising that work to assess your readiness for, say, a pension increase exchange exercise. By working closely with your provider, you can ensure that the transition project supports the longer-term objectives of the trustee and employer. And finally, to loop back to my opening point, remember the definition of a transition is a change from one thing to the next. It has predictable and regular form. My final advice is to avoid adding work to the scope of the transition project that introduces uncertainty or is unpredictable in nature. Avoid undertaking data cleanse work in the project. Avoid introducing rule changes or factor reviews that affect calculations. Don't undertake a benefit audit alongside the transition. Whilst it might be appealing to sweep up multiple initiatives in a once and done type approach, it puts added strain on what is a project that already requires significant management of risks. Instead, focus on the transition first and foremost. When done well, this will provide you with a solid foundation for transformation and continuous improvement. So, in summary, my key advice for a successful transition is manage the risks, learn from the due diligence, share your objectives, and avoid adding unpredictable work. And with that, I'll hand over to my colleague Dan Taylor to talk more about service transformation.
Thank you, Gillian. Once the risks of the transition phase are understood and tightly controlled, you can then start to consider the areas of standard transformation. And this is the value-added element of any transition project. And while the amount of change needed may vary from scheme to scheme, the assessment should always take place as scheme requirements will always differ. What we mean by standard transformation are the changes needed for your scheme to fit into the operational model of your new administrator. When you perform this assessment, you should be looking at key areas of change. For example, changes to standard communications, processes, guidance notes, or anything else that might be needed from a scheme-specific or design perspective. Trustees should ensure that the transition project delivers this analysis and allows for those activities that are needed to meet the agreed solution for go live. No matter how standardised or uniform administrator's operation is, you will always need some degree of adaptation for your scheme to fit with the approach and outputs of that administrator. This stage will inevitably determine the base level of automation a scheme can achieve. Usually, some of the transformative action can be delivered through your transition process, and base level of transformation is probably what your new administrator highlighted through your procurement process. A common example of standard transformation are the updates and changes administrators need to make to member communications to cope with the nuances of scheme rules and contacts at the sponsor. Another area might be base levels of calculation and process automation being adopted. But whilst you can receive some short-term benefits and efficiency gains through standard transformation, you're unlikely to achieve maximum efficiency or long-term strategic objectives by implementing just the necessary service enhancements. So, after you've implemented the standard level of service transformation and you've achieved an operational steady state, you should then look to customised transformation to achieve longer-term improvements. Customised transformation involves scheme-specific technical projects, such as data cleanse and levels of enhanced automation. Customised transformation generally involves a scale of tasks that cannot be completed in the relatively short timescales of a scheme transition. For example, any problems in data that were identified in the transition phase and the standard transformation analysis would highlight deficiencies in both risk and quality. Projects can then be prioritised and scoped to correct data or improve solutions. Customised transformation should always be approached in the context of a much larger objective. A very broad objective of, say, simply improving data is unlikely to yield any definitive short-term benefits. Trustees will also probably find this a never-ending cycle with very few tangible benefits ever realised. But an objective of, say, improving web functionality would improve data accuracy as well as levels of calculation automation, the direct benefit of which would be improving levels of member engagement, efficiency and cost control. These customised transformation objectives range from, say, improving service levels, the ability to transact bulk annuity transactions, or enhancing back-office functions such as achieving higher levels of process automation. These are much longer-term targets, though, and it is doubtful that these will ever be achieved simply because you've changed the administrator. Trustees and sponsors must assess a provider's experience and ability to deliver transformation projects as part of their selection process. This assessment of a provider's ability to deliver transformation is especially important in the current landscape, where increased demand for these skills has led to a capacity crunch, resulting in falling standards, extended project timelines and rising costs. In the pensions administration sector, a transformation is rarely as dramatic and instant as, say, dyeing your hair pink or getting a tattoo. In our world, transformation is a set of controlled, incremental projects, each aiming to deliver a new and improved steady state for members. It is the ability of administrators to establish and sustain change over the long term that enables a scheme to achieve its overall change objectives. So, just to recap on some of the points we've covered today. The first is that if you're changing administrator, then use the transition process to focus on risk management. You can probably use it as the foundation for long-term transformative change, but the process of changing providers in isolation is unlikely to dramatically improve operations. The second is that looking at ways your new administrator's processes need to be adapted for your scheme is an essential step in establishing an operational steady state at go live. And then finally, that the long-term service improvements should be driven by a process of customised transformation that focus on small number of strategic objectives. That concludes today's webinar. So thank you for watching, and we're now going to open up the floor for any questions.